Ladies and gentlemen, welcome back. This is Christopher Aaron. It is April 16th, 2024. We are going to have a hugely important topic today, which is, can the gold price get to this $3,000 per ounce level in this cycle? I do think that it is possible. However, there is a distinct roadmap that one must follow. We should pay attention to how gold advanced in previous cycles and then look at how that could apply to the move that is coming up toward 3,000. The other thing that I want to do in this update is to give to you for free the research behind one of the gold mining companies that I am investing in personally. Our paid subscribers are investing in this personally. I'm going to give you this research for free. That'll be coming in the second half of the video. The company's name is Sirios Resources. They are sitting on a deposit of 1.9 million ounces of gold, the very gold that could be getting to $3,000 per ounce. Sirios trades in the United States under the ticker SIREF, and it trades in Canada under SOI on the Toronto Venture Exchange. And before we go any further, to answer your questions, no, they are not paying me a single cent. No one is paying me to discuss this company. That is not my business model. My business model is to invest in gold mining companies and then to share the research with people who find value in the research. Let's get into the update here on gold first, and then we will talk about what is happening with Sirios if you want to try to achieve leverage to the gold price move that is coming up. Here's our legal disclaimer. And we go. Okay, so let's look at the scenario to 3,000, how this would appear for the price of gold. As we know, gold has broken out to new all-time highs just 6 weeks ago. A lot of people think this is going to go just in a straight line, continuing higher, and I want to share with you why I believe we can achieve this level, 3,000. However, if we study historical analogs here, if we look at periods such as from 2007 to 2010, when gold broke out right here above $1,000 per ounce in late 2009, remember, this was an all-time high at the time. Gold had never traded above this level in the history of human civilization as priced in US dollars. So we have to remember this period was similar to the period that we're living through right now as far as what people were going through at the time and what the psychology of the market was. And so remember, after breaking out here in October of 2009, gold then had this initial move higher by about 20%. But then what? It came back to retest. It retested that breakout point before moving higher by almost 100% in the last 2 years of that cycle. Okay, so here we are currently. We're seeing a very similar pattern. Gold is clawing its way. It's almost 20% higher from the breakout point that we saw 6 weeks ago. All I'm trying to say is that although the pathway is clear here for gold to be moving into some of these numbers over the next year to 18 months, we should be aware that there could be the possibility of this retest, quite similar to what happened here in early 2010 after that breakout. And that would be the point at which we get the more sustained and strong advance toward the 3,000 target. So let's just keep this in mind. Although I am bullish on gold, there is the possibility of one significant pullback. Investors will be wanting to use that pullback to add to their positions for what could be a dramatic wave to come after that point. So let's just remember that that is the scenario whereby gold would then be moving into some of those numbers around $3,000 per ounce or maybe even higher. So what I want to do now is share with you the research onto why we are investing in this gold-related company, Sirios Resources. We just looked at the price of gold above ground, And now we are looking at the price of gold below ground. This company, Sirios, has 1.9 million ounces of gold sitting below the ground. And the most important thing to pay attention to with respect to this company is the valuation. The total resource is known according to the standards by the government of Canada to be 1.9 million ounces. And this deposit is trading for a market cap of $12 million. Now, do the math here with me for 1 second. That means that Sirios, the gold in the ground, the 1.9 million ounces, is being valued at $6.30 per ounce in the ground. Can you imagine this? Gold above ground is trading for a little under $2,400 per ounce. Gold in the ground is trading for $6.30. There is a dramatic potential for life-altering revaluations if this company achieves what are the historical norms for gold in the ground. If we just go back to the 2011 cycle, gold in the ground was trading for $50 to $100 per ounce in the ground. Gold prices above ground are higher than they were now in 2011. Back then, gold peaked out at $1,900 per ounce. Right now, gold is almost $2,400 per ounce, yet we're seeing the valuations in the ground at only a fraction of what they were back in the previous cycle. And this is all due to the sentiment in the sector. The mainstream investor has not yet come into this sector. Think about it. In your wider life, not in the little precious metals community that is on the internet or on a few of the message boards, but think about in your wider life, right? Think about if you go to a coffee shop, or if you go to a bar, or you go to the gym, or you go to a class that you're taking for school. Are people there talking about gold? No, barely anyone is talking about gold. So the psychology right now is nowhere near what it was in 2011, and therefore this is our potential for gold in the ground, currently valued at $6.30, to move back to the historical range would give us an 8x to 16x potential revaluation. I'm not talking 8%, I'm talking 8-fold to 16-fold just to get back to the historical normal valuations. And this is at today's gold prices, let alone the fact that gold should be moving higher over the years ahead, as we said. All right, let's look at some more of the details for Sirios Resources. By the way, 45% of this company is owned by insiders and institutions. And so this is a very tightly held company. There are not all that many shares available publicly. I like what this company is doing. Remember, they have zero debt, so you don't have to worry about any sort of bonds or interest payments that they have to make. No debt, 1.9 million ounces of gold in the ground. So we have to ask the question, is it really possible for a company to go 8x to 16x higher just based on a shift in the sentiment if that gold is already in the ground, where in the case of Sirios it is demonstrated to be? To answer this question, I have to take you back to one of the previous companies that we invested in the last cycle, and I just want to show you how this played out. This is a very similar company. The name was Spanish Mountain Gold, actually a larger company. And this is a company that was sitting on 4.1 million ounces of gold in the ground, so about twice the size of the nearly 2 million ounces that Sirios is sitting on. And we bought back into this stock here in the middle part of 2020. Our premium members, you can go back into the archives of our website and you can check to verify this, that we in fact bought shares here at 10 cents in 2020. Now, the key thing, however, is that to remember that Spanish Mountain Gold was trading below the peak level from 2016, right? This stock peaked at 20 cents per share in 2016. It was trading all the way down at 10 cents per share in 2020. This is after the coronavirus panic when gold crashed in the beginning part of the coronavirus, and then gold recovered to above its 2016 peak. But a lot of these gold miners with gold in the ground had not yet recovered. And so the market was being irrational. The market was saying, well, we're going to value gold in bar form in one way, but we're not going to yet revalue gold in the ground to where it should be, which was above this 2016 peak. And we were looking at this at the time and we were saying, this is an opportunity. This is where we have to disagree with the market. Remember, as an investor, you have to disagree with the market. You have to say, market, I think you're wrong. You're undervaluing this company. It should be above where it is here in 2016. I think this price is wrong. And so we bought shares here at 10 cents in 2020. I want to fast forward this chart by 2 months. I'm not joking. Look at this. Boom. This stock shot up 500% in less than 2 months. Was there any fundamental change in this company? Nothing whatsoever. It was the same 4.1 million ounces of gold in the ground. It's just that all of a sudden the market said, whoa, wait a minute. We had previously valued this below the 2016 peak, but gold is already above its 2016 peak. Maybe we're sleeping on this company, and this is the result. We made a huge profit on this company, Spanish Mountain, back in 2020. To fast forward to today, I think the potential is in companies like Sirius. Pay attention to where Sirius is right now, trading at 6 or 7 cents on the Canadian exchange right now, and look at where it traded back in 2016, above $1 per share. Ladies and gentlemen, I'm telling you, I know the management of this company personally. Remember, they are not paying me a single cent to publish this. I'm just trying to share with you the best opportunities that I see in this market, because that's my business model. And if we can all profit together, I think you'll remember that down the road, and hopefully you'll want to join us in our premium services. But for right now, I'm sharing with this for free. This company traded back here above $1. It's a better company now. Gold is already above its 2016 peak. It's just that the market is sleeping on the valuation of this company the exact same way that the market was sleeping on the value of Spanish Mountain Gold if we just rewind by a few years. So if this company was going to get back into this zone here around the secondary resistance, I think this is very realistic for the company over the next 12 to 18 months. Our fair value estimate for Sirius right now, based on today's gold prices, is 700% to 1,500% higher. You think that's impossible? Look at the previous example. I just showed it to you. When the market realized that Spanish Mountain Gold was undervalued in the last cycle, it shot up 500% in less than 2 months. I think we have a 1 to 2 year cycle here, as gold should be moving higher toward the $3,000 ounce level, perhaps even higher. And I think this is a very reasonable estimate. This doesn't even get the company above its 2016 peak. I think that could happen in the future. I'm trying to give a reasonable estimate based on today's gold prices for where Sirius should be trading. Okay, let's talk about some of the fundamentals now for this company. So the important thing to remember about Sirius is this is a company, their primary deposit right here is called Chihu, and this is the 1.9 million ounces of gold already sitting in the ground. They have 1, 2, 3 other gold exploration properties. And so we're talking about the 1.9 million ounce deposit here is really being an anchor for this company as far as valuations go. But then we have the additional upside exploration from these lithium properties. Remember, lithium is being used in battery metals. It's being used in car batteries for all the electrical cars that are coming out. So there have been some major new discoveries for lithium in this area as well. Just to touch on that lithium upside potential for a moment, I want to show you the major discoveries that have happened in this region of Canada up in Quebec. So here we are in orange looking at Sirius's properties, and you can see next to the orange the major discoveries that have been made here in green, these major lithium discoveries that have happened over the last 5 years. And then you can see in blue the already known existing lithium deposits. Look at this one. So the point of this is to remember that although Sirius is primarily a gold company, they have this additional upside potential. They have optioned off a lot of the lithium exploration potential to other companies, where if the other companies discover gold on these properties, Sirius is entitled to the gold. And if the other companies discover lithium, Sirius will receive a royalty going into perpetuity on the lithium component of that. So Sirius is really a gold-anchored company with the lithium upside. Now, let's talk about the consolidation that is happening here in this region. One of the neighboring companies is called Fury Gold Mines, and you can see right here that Fury has just spent $1.3 million to buy 30 million shares of Sirius from Newmont for investment purposes. So there is major consolidation potential happening here at the primary flagship. This is the 1.9 million ounce deposit at Chihu. And the important thing to notice is here we're looking at it visually. Here we're looking at Chihu, and then you can see on the map, literally 15 kilometers away is an existing producing gold mine that is owned by Newmont called Eleanor. Eleanor is producing over 200,000 ounces of gold per year, only 15 kilometers away. Now, Eleanor is actually one of Newmont's smallest mines, and they are considering selling the mine. And so here we see in the last slide, we looked at Fury, which has bought out Newmont's ownership of this adjacent property. And so whoever comes along and buys Eleanor from Newmont is absolutely going to be looking at Sirius's deposit right here. Look how close these deposits are. You could very easily be mining Chihu, the 1.9 million ounces owned by Sirius, and then take this on a road 15 kilometers by truck. You could put in a rail here to connect it to the Eleanor mine. There is existing infrastructure here. There is a processing plant that's ready to go. So whoever steps in here and buys Eleanor is going to be the logical buyer of Sirius in the future. Now, this is my prediction. This is what I expect to happen as an investor, is that someone's going to come in and consolidate this entire region. And remember, when new companies come in and buy existing deposits, they don't buy it at the current price. They buy it at a premium to the current price. So this is our investment thesis for Sirius. There's going to be consolidation in the industry. If we zoom in here on the flagship Chihu deposit, let's bring that in. Remember, this is the 1.9 million ounces that Sirius already has in the ground. You can see all of the drilling that has been done here on Chihu. You can see the outline of the 2022 preliminary economic assessment. This is an official study that has been done to show the 1.9 million ounces. So this is the outline of the pit. I do want to mention to you that there is a new drilling program that is going on at a different area. This is called the Eclipse area. This is not included in the 1.9 million ounces. So they're drilling for more gold here. They expect to find higher grade gold at Eclipse. This would be added onto the 1.9 million ounces if they find gold there as well. The last thing I want to mention is that you can see here by the border of the land, if Sirius is able to make an agreement, or let's say one company comes along and buys out all of these companies that are involved in this region, Sirius will be able to add an additional 500,000 ounces of gold to the existing 1.9 million. And that would bring the total into the region of 2.4 million is our estimate when they come to an agreement. And what they'll do is they'll share the responsibility for mining this deposit, and they will split the gold evenly along the border. That would add the 500,000 ounces. It would allow them to expand the footprint of the open pit walls. And you would be then looking at, you add what could be here in Eclipse, you add that to the 2.4 million ounces. Guys, we're starting to push 3 million ounces of gold in the ground when we make a reasonable assessment for what could be coming over the next few years. This could be quite a significant deposit of gold sitting in the ground for Sirios at Chihu. So I want to mention a couple of the other deposits. Even though we already talked about the flagship, 1.9 million ounces that could be approaching 3 million over the next few years. I want to mention they also have this other advanced stage project called Aqualon. And look at some of the high grades that they're finding here. Look at this, 3.9 meters of 370 grams per ton. This is incredible. This is extremely high grade. Look at some of the other grades here, over 100 grams per ton. Look at this. Some of these small intercepts here, almost a meter of 3,230 grams per ton. This is insane. Of course, these are small intercepts. However, you have to look at how wide apart these small intercepts are spaced. Here's the key. It's 250 meters right here. So these small intercepts are about 4 kilometers in length. This is a huge district that they're finding high-grade gold all around. And I want to mention to you, this has not gone unnoticed. This deposit has actually already received a commitment of over a 10 million Canadian investment from Sumitomo Metals, which is a Japanese mining company. And they have agreed to invest this much, over $10 million Canadian, into the Aqualon property alone. They will not get any of the flagship 1.9 million ounces of gold. That is 100% belonging to Sirios. But Sumitomo has an option on this Aqualon property. If they pay the full $10.7 million, that would be equal to 80% of Sirios' market cap right now alone, let alone the fact that they have then the flagship deposit sitting on the side, let alone the fact that they then have the lithium exploration. I mean, this could get really significant when you add up all the pieces together. So that's their other exploration gold project, looking quite formidable at this stage. Let's discuss the key takeaways if you decide to join us in investing in Sirios. They have the existing 1.9 million ounces of gold in the ground. This is not hypothetical. It is measured and indicated gold already in the ground. They have the lithium exploration joint venture deals already ongoing and the high-grade gold exploration project, Aqualon, that we just looked at. 15 kilometers away from Sirios' deposit is the producing Eleanor mine, which is already producing 200,000 plus ounces of gold per year. And this will quite easily be consolidated into one gold-producing district. It is just a matter of time, according to our research. The neighbor, Fury Gold Mines, is motivated to consolidate this district. That would add 500,000 ounces plus or minus to the existing 1.9 million ounces. Last but not least, gold is breaking out. We looked at the gold chart. It is making new all-time highs right now. Our assessment is that based on today's gold prices alone, Sirios should be 700% to 1,500% higher, let alone what if they add more gold to the bottom line, let alone what if they find lithium, what if they expand the footprint at Aqualon. There are so many fundamental catalysts, but back to the most important point, this is orders of magnitude undervalued based on today's gold prices. We looked at the example of Spanish Mountain Gold in the very beginning that rose 500% 2 months after we invested into it back in 2020. that had no change whatsoever to the company fundamentals. It's just that all of a sudden people realize this is undervalued. This could be the next major one to set up for this type of revaluation. That is why I am investing myself, and our premium subscribers that are paying for this type of research are also investing in Sirios. Okay, let's take a little step back here. Let's say you're with me so far. You have the tolerance to make a high reward, high risk investment like Sirios. You're saying, look, I might want to throw a few hundred or a few $1,000s at this because that could be that 5 to 10x potential at minimum. If you're with me this far, I want to let you know why you might want to consider joining us in our service called Elite Private Placements, because you will get even greater profit potential by buying the exact same shares if you do it with us in this private placement. Okay, so let me explain this to you in case you're new, how these private placements work. We are going to be buying shares in the exact same company that we just looked at, Sirios Resources, the exact same legal shares. It's the same valuation, the same gold in the ground, the same company. The only difference is that in the open market, the company is now trading for 7 cents per share on the Canadian exchange, which is the primary exchange. But in our negotiations with the company, we have locked in the ability to buy shares at 6 cents. This is a 16.6% initial profit when you look at the difference between 7 and 6 compared to the open market. So remember, there is a minimum to invest in these private placements. It is just over $10,000 Canadian, which is about 7,000 US dollars, about 6,000 British pounds, or about 6,500 euros. So remember, if you can't afford to invest the minimum, that's okay. I still think that you should buy or consider buying shares of Sirios in the open market. It's just that you'll have to buy them at the 7 cents, whereas in the private placement, we are buying shares at 6 cents per share, a very lucrative deal. The other thing that you get if you can commit this minimum with us is that you will receive free warrants. And what the warrants do is they grant you the option to buy more shares at 12 cents per share at any point within 2 years of the closing. Now, what this means is that if the share price rises above 12 cents per share, you get additional free profit above and beyond the 16.6% that you'll be getting based on the share price difference here versus the open market. You'll be getting additional upside for free, and you're not taking any additional risk. So this is how companies reward you. If you can invest the minimum here, they say, look, you're helping to support us. We're going to give you something back, and they give you these warrants for free. I do want to remind you, so we have those two great benefits here. If we go together, this is what I'm going to be doing with my money. This is what our investors are going to be doing. I want to remind you that the deadline to register, this is a program that we offer called Elite Private Placements. If you want to join us, the deadline to register for our service and then to get us the subscription forms back is this Friday, April 19th. Close of day, 5 p.m. Eastern Time. You have to register for the program and get the forms back to us. You'd simply download the forms from our website, get them back to us, and then by Wednesday of next week, April 24th, you initiate your wire transfer from your bank directly to Sirios. And then they send you the shares at the discount, and they send you your free warrants all together, and they send those either directly to your brokerage or they can send them to your house or your business, whatever your preference is. And we are here to assist along the way, but I have an exclusive negotiation with Sirios to fill this order. The only way to get access to this private placement is through our group called Elite Private Placements. So please keep in mind the deadline is this Friday to get registered for the discounted shares and the free warrants. And so you might be saying, well, what is the difference? When push comes to shove, does it really matter if you buy in the open market versus the private placement? I just want to show you the difference. And so what we're going to do is look at the exact same chart for Sirios. We looked at how it should be trading all the way up here above the 2016 peak. We looked at how Spanish Mountain Gold was doing the same thing, and then boom, suddenly it was revalued all within 2 months. This could be the similar kind of setup here. I just want to show you the difference between buying shares in the open market at that 7-cent level where it is now trading versus buying shares with us in the private placement at 6 cents. And then remember, you get the free 2-year warrants at 12 cents. So if you were to buy in the open market, let's say today or this week, and if Sirios was to simply get back to this stage 1 base resistance level here at 25 cents, you would be looking at a 257% profit. This is extremely reasonable. I mean, Sirios traded at this level back in 2020, again back in 2019. This is extremely reasonable to think that the company could be trading at this level again. Certainly not bad to have a 257% profit if you buy the shares in the open market. Let's talk about if Sirios could get back to this secondary resistance. Again, very reasonable. We're only talking halfway back to the 2016 peak. Between you and I think this company could trade well above the 2016 peak as gold is moving toward $3,000 per ounce. But I like to give more reasonable intermediate term targets before we look at those longer term targets. So if Sirios could get back to this secondary resistance here around 50 cents per share, that would be a 614% gain from the current level at 6 cents per share. Okay, again, pretty good. We're starting to get into the realm of significant possibilities with this. However, if you join us in the private placement, I want to show you the difference in the math, how it works out, because you're buying the shares at a discount and you're getting those free 2-year warrants. The difference works out to this. If the company just gets back to the exact same level, so I'm talking the exact same stage 1 base resistance here as in the example at the bottom in the open market, if you buy in the private placement with us, that's going to work out to be a 425% gain. And once again, the reason for that is because you're buying the shares at a discount and you're also getting free 2-year warrants, so you get to cash in those warrants for additional profit. If the company gets back to this level, the secondary resistance right here at 50 cents, you are going to be looking at over a 1,000% gain if you buy the shares with us in this private placement. So we're getting into the realm here of life-altering potential. Again, this is all based on reasonable expectations. Where did Sirios trade here over the last 5 or 6 years? Where are gold prices currently? What could happen if the sentiment changes in this sector? That's all we're waiting for, is that higher sentiment coming in this sector. So I encourage you to consider joining us in the private placement if your means allow. And if not, I would certainly be looking at this one to buy your shares in the open market. If you would like to join us in that private placement with Sirios, the service for you is called Elite Private Placement. Remember, this is the service where you get the highest leverage, you get the free warrants, and this deadline is coming up Friday, April 19th. No exceptions can be made to this whatsoever. So I would encourage you to get registered on Wednesday or Thursday so you have time to download the forms and get those forms back to us by Friday. If you would like to learn more about the other open market companies that we are investing in here, remember, we're investing in anywhere from 8 to 10 companies at once. You've just seen one of those companies that we are investing in, and you would like to learn more about why we are doing what we are doing, as well as not just when we're going to buy, But when are we going to sell? The service for you is called Precious Metals Intelligence Plus. You will receive weekly videos just like you're seeing right now, but much more in depth, covering not only gold and silver, but also the stock market, the rest of the currency markets, the commodities sector. We even cover Bitcoin from time to time at major turning points these days. All of that goes out to you in Precious Metals Intelligence Plus. Remember, if you join us in Elite, you also get a free subscription to PMI Plus. If you would like to sit down and discuss your personal situation, discuss, how much of this I would invest in if I was in your situation, I can give you my best take based on a researched independent perspective. Just look for the Consultations tab on our website. Remember, I do not take any fees or any kickbacks whatsoever from a company like Sirius or any of the companies that we are involved in. I am 100% independent, and the reason I do that is so that I can give you my best take on the markets and not have my message compromised by taking any fees or any kickbacks. So think about this possibility. We talked about today in the beginning of this broadcast that gold has a way higher, that it could achieve $3,000 per ounce. And then we looked at the fact that Sirius should be worth anywhere from 7 to 15 times higher than it is currently based on existing gold prices. And let alone if they then discover more gold, we're then going to multiply that into the existing expectation. That's how undervalued Sirius is right now. This is one of the companies that I am investing in, as well as many of our paid subscribers. And I would simply suggest that you take a hard look at it right now, because these opportunities do not come about every year.